Greetings, great learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be focusing on the general journal. My main focus is going to be on bad debts, interest on overdue debtors, as well as interest on overdue creditors. I want to encourage you to have somewhere to write so that you can do practice together with me. With me here, I have a question which we are going to do together. Ensure you have a paper to write, pen, you need a calculator as well for today's class. The first transaction reads, charged J. Tom, who is a debtor, with 8% interest. Let me just get my pen here. There it is. With 8% interest per annum on his overdue account of 9,200. And this amount was due for 3 months. Let's first calculate the interest then. I will say 9,200 multiplied by 8%, which is the interest, and it has been overdue for 3 months. It will give me an amount which is 184. Let us now come and record this in the GJ. The day is the first. The details. Remember, once we charge a debtor interest, it is going to increase what the debtor owes us. So our debtor's control or our debtor's amount is going to increase. So we are going to debit the debtor, who is J. Tom, and we are going to debit them with 184. Once we debit our debtor, it means we also come and debit our debtor's control, 184. We now need to have an account which we credit. And in this case, it is interest on overdue debtors. I'll come here, then I'll say interest on overdue debtors. So this is interest income. That means it comes to the credit side, 184. Let's quickly go to the next one. And it reads, King Suppliers, a creditor, charged Bismarck Traders with 10% interest per annum for 4 months on their overdue account of 8,400. Let's quickly calculate that. 8,400 multiplied by 10 over 100, and how many months? 4 months, multiplied by 4 over 12. This will give us an amount which is 280. This transaction has to do with a creditor that is charged as interest. In this case, the interest becomes interest expense. So we're going to debit now interest on overdue creditors. And the date, remember, here I'm going to write 2. I'm going to say interest on overdue creditors. How much is that? I'm debiting it because this is an expense, 280. So I debit it because it's an expense, 280. And then I'm going to credit my creditor. Who is my creditor now? King Suppliers. I'll come here. I'm going to bring it back. There it is. I'm going to credit King Suppliers. King Suppliers. I credit King Suppliers with how much? The same amount, 280. The moment I credit King Suppliers, I should also credit the creditor's control. That means we owe more to our creditors now, 280. Let us continue with the next one. The third transaction reads, J. Archer was declared insolvent. His outstanding balance was 2,000. This is what he was owing us. Bismarck Traders received a final dividend of 35 cents in the rand. This was received. It would have been recorded in the CRJ. This has been recorded. Write the balance off as irrecoverable. So the balance, remember, the initial debt would have been 100. We have received 35 cents in the rand. So the amount that we have not received is 65 cents in the rand. What we want is 65 over the initial amount, which is 100 multiplied by 2,000. That will give us 1,300. We are writing off bad debts. I'll come here. Number 3. Bad debts is an expense, so we debit it. Bad debt. On the debit side, 1,300. And the next entry has to do now with the debtor, J. Archer. Once I credit J. Archer, I'll come here, 1,300. That means I'll come also to my debtor's control. Remember, on the debit side is a plus, on the credit side is a minus, which is different from the creditor's control, because the creditor's control on the debit side, it's a minus, and on the credit side, it is a plus. I'm coming to my debtor's control, and I'll come to the credit side, and I will now say 1,300. That means this particular debt has been written off. The last one reads, a creditor, Man Transport, charged the overdue account of the business with 400 interest. Here's number 4. We have been charged interest, and the interest, once we are charged, it becomes interest expense. In other words, our liability is going to increase. So I'll debit my expense in that case, which is interest on overdue creditors. Interest on overdue creditors. I will debit 400. Interest on overdue creditors. And the creditor is Man Transport. So I'm coming here to say Man Transport. And once I credit Man Transport with 400, it will also affect my creditor's control. You will find 400. On what side? On the credit side, because once interest has been charged, it increases what we owe to our creditors. We will move on to the next question. It says, show the effect of the following transactions on the accounting equation. Let's quickly do that. Number 1, charged J. Tom a debtor with 8% interest, and we have already calculated this initially when we did the GJ. So already you know here your interest is 184. I'll come here on the first account debited. Which account we debit? We debit the debtor's account, J. Tom. All right? It is J. Tom. And then once we debit J. Tom, that means our assets are increasing, plus 184. And which account we credit? It is interest on overdue account. Interest on overdue account. Remember, this is a debtor. It says a debtor. So this is interest income. Interest income affects owner's equity, plus 184. Liabilities becomes 0. The second one, King Suppliers, a creditor, charged Bismarck Traders with 10%. We did this one as well. We already know that our interest is 280. So when we come here, we are now saying which account do we debit? King Suppliers, a creditor. So this is interest expense. So we will have interest on overdue account. We very much understand that this is an expense. It will affect owner's equity minus 280. The account to be credited in this case becomes our creditor, Bismarck. Okay, our creditor is King Suppliers rather. Bismarck is us. So it will be King Suppliers. Okay, so we'll come here, then we say King Suppliers. And then that increases now our liabilities plus 280. Does it affect our assets? No effect on the assets. The third one, J. Archer was declared insolvent. We calculated bad debts and we found 1,300. Once we have bad debts, we debit bad debts because it is an expense. We come honest equity minus 1,300. Bad debts is an expense. Account to be credited, it is the debtor, who is J. Archer. And J. Archer is an asset. Remember, J. Archer is part of the debtors, so he falls under assets because he was a debtor. So our debtors are going to decrease by 1,300. All right? And then the next one. So here, when you say on the third one, J. Archer, remember J. Archer is part of your debtors control. Then the fourth one, which is number 4, says a creditor, man transport, charged the overdue account of the business with 400 interest. The account to be debited in this case is interest on overdue account. And this interest is being charged by a creditor. So this becomes interest expense. So I'll say interest on overdue account. It will come to owner's equity minus 400, which is what we have here. And the other account is man transport, which is part of our creditors. So I'll say here man transport, which is part of our creditors. That means our liabilities have increased plus 400. No effect on the assets. I want to encourage you, dear learners, to continue practicing such questions. We're going to go for an ad break, and I'm going to see you in a short while.